Good morning, traders, investors. Dale, so good trader boys. We're coming back to a full week after a long weekend in the U.S. So with the Thanksgiving to all the Americans out there and all the ones that celebrate Thanksgiving, happy Thanksgiving. Taking the gratitude and be thankful for what we have and what we achieved and where we are, wherever that may be. At the highs or at the lows or anywhere in between, So let's get through this. We got the markets here, and we're looking at a little bit of a mixed market. We got the Nasdaq leading to the upside. S&P is slightly down and moving higher right now. We're coming into 15 minutes before the market open here. We got the Dow down 100 points, the Russell down four points. So a little bit of a mixed market. So we got to be a little cautious on how we approach this market. We'll take a look at the charts in just a second. We'll look at where we are located in the markets, and very, very important to understand your location. The higher the price, the greater the probability we fall. The lower the price, the greater probability we will rise. So US dollar is down 20 cents. So money coming out of the dollar there. The dollar dropping, that gives you a greater probability for gold to rise. Or in today's world, we're going to start looking at cryptocurrencies as that move is taking place, that transition is taking place. So this has been in the works for many, many years, and we are starting to see money flow into those cryptos and the acceptance of digital currency. So bonds are slightly down, oil is slightly up, gold is down currently with the dollar down. Okay, so they are currently moving together, which is not common. Silver's down with gold. Now we've got Apple, basically at break even. It has been slowly rising through the pre-market hours here. Amazon is up $10, only 0.3%. Right, so you can see big tech stocks here are mostly flat, except for Tesla and Zoom. And Zoom is coming into earnings, so this is a big purchase, right? Big run up before the earnings announcements. So this is a typical move. Right? Everyone's buying before the earnings announcements, and we'll kind of see either a pause or a dump of that before the earnings release. Right? NVIDIA is a stock to watch right now. It's in a triangle formation. And in the trading room here, we're going to be looking for the breakouts. I've already posted that this morning. Now you've got financials here. Goldman Sachs, JP Morgan are both down this morning. And no doubt coronavirus plays of the airlines and the cruise line here. One slightly down and the other two up. So we can see some money coming into the coronavirus plays as well as companies like Zoom. The money is flowing into those areas. Oil is down this morning. Right? Exxon and Chevron, phenomenal transactions here. You've got the vaccine coming into play here. We get the reports going through to get the emergency release to get the vaccine out as early as possible. The vaccine has already been flown into the U.S., so it's just waiting for release now. And as we get that in the economy, we're going to start to see people get back to work and the economy open up and get rid of these shutdowns. And as that happens, we'll start to see the demand increase in oil in the short term. So as the increase in demand on oil, obviously Exxon and Chevron are going to benefit from that. Now, these companies here are somewhat low in price with massive dividends. So a phenomenal long-term play, phenomenal dividend play, and the fundamentals are supporting that right now. So you guys know, you've been watching me and following me for a while here. We're looking at Exxon back down to the $31, $32 range, and now we're pushing the $40 mark, and also collecting, at this point, an 8.8% dividend play. In the low 30s, that was a 10% dividend play. So that's huge, absolutely huge. So down the bottom, just a couple stocks to keep an eye on there. Now, let's take a look at the sectors here in the pre-market. Majority of the sectors are down, except for right now, technology is slightly up. Right? So we do have money coming out of this market, more so going into the market here. So this is something to watch on the market open in the first 15 minutes of the stock market open to see where the money is flowing. Wherever the money is flowing, you want to move with that. That's either flowing into the market or moving out of the market. Okay, so right now, technology is the one that's reaping the benefits here and moving to the upper direction. Jumping over to the charts here, we'll start with the S&P 500. This is the daily time frame. We are in daily supply, and this is proven here. We came somewhat deep into it last Tuesday in the overnight sessions, and then we've just floated around this area here. So we're floating up into this area. We're below the 50-day moving average right now. That is very, very important to note. So if we kind of zoom in here a little bit, you'll see on Friday, on the half day of Friday, we kind of closed right at that 50-period moving average. We're just above it right now. But once we break below the 50-period moving average, it is common for that to be used as a resistance and force the market lower. So with the moving averages here, now the one thing we got to look at, the importance of moving averages, are they really that relevant? We kind of put a lot of weight on the moving averages with the markets moving sideways here. And all that's happened is the average price has gone sideways, so the moving averages are coming to price. So don't put a lot of weight on that, but 50-period moving average in a daily time frame is a very, very relevant indicator. Coming up into the supply here, we've tagged that supply this morning. It has been used up quite a bit, so not a lot of strength here to really force this down. So not a very strong argument to the downside or the upside right now on the S&P futures. So be cautious on your transactions, wait for the money to flow, and then flow with the big money. Okay, and that's how we trade smart and intelligent and manage our risk. So don't be forcing any trades just yet this morning, because the markets could pop right through the supply area and get a big move up, or the supply area can hold and push the downward direction. Everyone's looking for direction from experience. And that is the direction from experience I can give you at this point in time. So we are at supply. We are at the 50-period moving average. We do have a greater probability to fall than what we do to rise. Okay? We've got to look for what the market wants to do here as we come back into a full week of trading. And we've got to look at last week and low volume week, right? Short trading week. We've got to exclude that data because there's not a lot of weight behind it of heavy institutional activity. So that's your S&P 500. Moving across to the Russell. All right, daily time frame on the Russell, you can see we're stuck in a trading range here for the last 3 days. Let's call it 4 days here. We're inside November 24th. Right? We're inside November 24th. We need to break out to the upside or break to the downside. Either direction here. So not looking to take any trades in the Russell until it gets a clear direction and we get money flowing into it or money flowing out of it, and we'll trade with whatever the market decides, or whatever the big boys decide on that. We will follow their cue and follow their transactions. And that's how we stack odds in our probability. Stack the odds in our favor. So on the NASDAQ, on the daily time frame, we are up into daily supply. So we've hit that daily supply in the overnight session here, starting Sunday night last night. Right, 12,322 is your supply area. We did have a nice run up in technology last week. Right, as the markets kind of stayed somewhat flat, technology did move up. So we saw a money flow coming into technology, and obviously into the Russell was going sideways. So we saw that transition of money flow into sectors. Okay, so this is where we currently sit in the markets. We have a greater probability to fall than what we do to rise, but you're going to have certain stocks in the market, certain areas and sectors in the markets. They're going to have that money flow coming in nice and strong. So, for example, Zoom this morning is having a huge amount of money flowing in because of an underlying criteria being earnings releasing. So with a company like that, with you get schools shutting down in New York, etc., their revenue is going to increase. So we're expecting a phenomenal earnings report. So investors are buying that stock before the earnings announcement. Very typical play on good, solid, fundamental companies. So that's where we sit for Monday morning. We will check back in the next couple of days here and kind of look at what plays out and how does it play out. I'm going to be posting transactions and trades as we go through the trading room this morning and keep our investors informed at the Trader Boys here. Have a phenomenal trading day. Feel free. Follow us on YouTube, Facebook, Instagram. Share the love. Hit the like button, hit the follow button, and you will be putting out some phenomenal content. So have a great trading week. Be smart, be intelligent with your transactions, and follow the big money.